Gen Z is not really drinking. And there's a number of people say, oh, it's not healthy, it's all, et cetera, which, I don't think it's the healthiest thing in the world. But what people say is actually the biggest source of Gen Z's not drinking is social anxiety. People are using screens, they're at home, they're not going to parties, they're not hanging out. And so there's less opportunities for social drinking.
Welcome to the weekly edition of the Payne Points of Wealth podcast, the podcast that addresses all the pain points that come along with creating, growing, and sustaining your wealth. Hosted by the family wealth experts of Payne Capital Management, Bob, Ryan, and Chris Payne. Please send us any questions or comments you may have to questions@payneCM.com. And please enjoy this week's episode.
Your stock portfolio, you hold roughly, was it 15 holdings?
We target about 15.
15, yeah. Okay. What do you look for in a company? And what's the advantage of having just 15 companies? That would make me nervous.
Yeah, no, absolutely. So I mean, there's a lot of different things. So we're concentrated, as you mentioned, but we tend to be not investing in the high flyer companies. So we try to target companies that we can really understand within our core competency, that we have a really good assessment of the downside, and if if XYZ happens, we have a fairly good idea of what the company could sell for if it was in a distressed sale. So the line that Red Apple tends to use is, we don't invest in anything that requires a PhD to know the CEO is stealing from you. And if you have to...
You're speaking my language.
Yeah. If you have to,
then
you should sell picks and shovels to the lunatics. So, instead, my ability to pick the next great AI company or cybersecurity company is very minimal, but I'd be very happy to build data centers and lease it to them.
I love that, right? The sell the picks and shovels. Well, that's actually a good question right now, because one of the debates we have here on the Payne Points of Wealth podcast is, where's artificial intelligence going? Is NVIDIA now, is that the buy? Does this party keep going? And to your point, your 15 or so holdings that you have, I'm going to assume, based on what you just said, NVIDIA is not one of your holdings.
It's not, but it used to be.
Why isn't it now? Selling
for valuation is almost never a great reason, and that's a lesson that we learn over time. But we did very well with the position, and we're not in it. Our original hypothesis on it was actually the rise of cryptocurrency mining and gaming. And cloud and AI were part of our hypothesis, but it was sort of a many years out.
Right.
This is around the 2017 time period.
Yep. Because the gaming was kind of their main driver back then. No one was talking about artificial intelligence at that time.
Right. But they were talking about cloud computing and machine learning.
Yeah.
And so that was always on the horizon, but was never, hadn't materialized yet in earnest. But it was clear that the world was heading more towards needing denser compute loads. So we had a position there, and it was priced at a very reasonable valuation back in the day when it was, pre-split $40 a share. Things obviously have changed since then. Giving you like a high level of how we look at our positions, we tend to either have fallen angel stalwarts, companies that have been able to compound capital for a very long time with very strong management teams that
fallen on hard times.
Hard times.
Can you give us an example of a company like that?
So there's a company that we are looking at right now, and we have a small position in, called Constellation. Constellation has the national rights to Modelo, Corona, etc.
But Americans aren't drinking a lot of beer right now.
Americans aren't drinking a lot of beer right now due to a number of issues, and also specific demographic issues.
Yes.
And so we've been following this company. Historically, it's been able to grow north of 10% organically, and has been priced at a very high valuation. That has all slowed down and reversed. Valuation has been hit, and lo and behold, on the last 13F, Warren Buffett has been starting to buy the company, which is pretty interesting. So I think that's the sort of thing that on the fallen angel side we're interested in.
Is the simple thesis there is like the pendulum kind of swings, right? Like maybe less people are drinking beer right now because Gen Z likes to vape and, I don't know, smoke marijuana, whatever it is. But eventually we'll go back to drinking more beer. Is that the simple hypothesis for something like that?
So it's a really good question. I think there's a couple things there. So there's the short-term disconnects in demographic changes, which we think will not sustain. We think that will reverse, if not all the way back to where it was, at least 75-60% to where it was. But there are longer-term demographic issues for drinking. Right? Gen Z is not really drinking, and there's a number of people say, oh, it's not healthy, it's all, et cetera, which I don't think it's the healthiest thing in the world. But what people say is actually the biggest source of Gen Z's not drinking is social anxiety. People are using screens, they're at home, they're not going to parties, they're not hanging out. And so there's less opportunities for social drinking.
Such a great point.
Are these companies starting to shift? Like, I know they're having like THC infused drinks and things like that to try to get to these generations who don't like alcohol as much. Like, do you think either people will start drinking and that will help it, or are they just going to shift their trends to find what these consumers want?
It's a really good question. I think there's going to be a lot of experimentation. I think it's one of those counterintuitive things where you would think in times of excess and things going really well, there's a lot of product experimentation.
Yeah.
But I actually think it's inverse to that, which is when things start to slow down, people start experimenting because they're worried about up with the lines going down.
Yeah.
Yeah. So that's one of them. And actually our main strategy, though, is more what's called white knight activism.
Okay.
And turnaround type situations, because that's most of what Red Apple's core business is buying bankrupt, distressed, or undermanaged companies and turning them around, fixing them, and building them. We like to look ourselves as the anti-private equity, where instead of buying a company, moving 30% of the jobs overseas, levering it up,
charging
firing
lots
20%,
of fees,
charging lots of fees. We build businesses. So we buy companies that are on the verge of bankruptcy or in bankruptcy or distressed, and we rehire everyone and we restart the businesses. So we took that skill set and are now doing that and helping public companies do that.
Can you give us an example of a company that's a turnaround situation right now?
Yeah. So this one is no longer, I wouldn't say it was a full turnaround situation. There were some changes that needed to be made, and we had very constructive conversations with management, and I ended up joining the board. So there's a company called Turning Point Brands, Inc., ticker TPB. I'm currently on the board, so can't talk about what we're doing now, but
sure.
It makes consumer products, and it had some unfortunate capital allocation decisions that led the company to start trading at a material discount to its liquidation value, which is what's interesting to us, because what Red Apple looks for in these situations is companies that trade at a discount than if you had to fire sale the assets, you would still make 20, 30, 40, 50%.
So it's like the book value of it's almost more than what it trades at, essentially?
Correct.
Yeah. What kind of consuber goods, just out of curiosity?
So it does things like chewing tobacco and papers and things like that.
Yeah.
Things that are through the convenience store channel. We have a convenience store chain, and so we're very familiar with the products and their brand positioning. The interesting thing here, though, was we knew that if you were to change some capital allocation decisions, some management approaches, that you could realize the core value of the assets. But what was really interesting to us was that there were 3 or 4 embedded call options within the business. One of them, if they hit, we think we would do very well at. So that was in what's called white pouch, which you and your listeners might be familiar with Zyn. So there's really only 3 or 4 or 5.
I had a small addiction last summer, but go ahead.
A small, okay. Yeah, there was something only like 5 licensed companies to compete with Zyn, because you had to file these government permits a long time ago.
Yes.
And this company had one of those assets. And we knew that they did, just from our diligence.
Yep.
And we felt that this was a growing category. The category itself is growing 30 to 40%
it's
per year.
It's wild how much it's growing.
Unbelievable. Yeah. And Zyn at that time had probably 75% market share. And name a widespread consumer category where one company stays at a 75% market share.
It never happens.
It never
happens.
happens.
This is NVIDIA's problem, actually.
Oh, interesting. Tell me
I'm
more.
just saying, no, I think just the fact that they're such a huge, what are they, like 78% of the market share? In America, you don't keep that market share for too long.
Right. I think that's one of the beauties of America.
Yeah.
We have a 50-50 joint venture with Tucker Carlson, and he launched his own white pouch because he had a falling out with Zyn.
I think he was promoting on the All In podcast, actually, yes.
Right. And so now it's one of the fastest growing consumer product companies in America. And in about 2 years, the stock has gone from around 23 to 100.
Wow.
So
is it a lot of it just like you have this playbook you guys know for other companies, and where you see you can apply that to other companies? Because I feel like a lot of this probably ties into the grocery business, if I'm hearing you correctly.
Yeah. So the grocery business, we have a convenience store business. Red Apple, our family business, has 14 companies in 7 industries, about $7 billion of revenue. And whether or not we're directly in the business or we're in the supply chain, we start to get pretty good insights about what's happening. And more importantly, we have the ability to check out whether or not management teams are being truthful and honest with us. And that is for sure the most important part, because we invest with 15 positions, our average holding period is we target 5 years, but it's often longer than that.
Yep.
Which means we only really need to find 3 new things a year. 2 to 3 new things a year. So we spend months and months and months on these, and typically we'll spend 6 months on something and the price won't be right, and we'll just put it on the shelf and we'll wait until something happens, and then we can act. But during that time, we get to know the CEO, we get to know the management team, and we'd like to say develop a really good relationship.
Now, you're 7 different industries, and I mean, every different industry can run businesses very differently.
Yeah.
I mean, are there certain industries that you're prone to seeking and others that you're prone to avoiding?
Yeah.
And I'm just curious, like how you guys.
No,
work that.
great question. As I mentioned, we don't invest in anything that is too scientific. Like, we'll never do biotech.
It's fair.
We'll never.
You're speaking my language.
Yeah, exactly. So I'll give you an examples.
Common sense. Yeah.
So we tend to be very heavy asset focused. So we bought an energy terminal as a singular asset out of bankruptcy in around 2013. It was one of my first projects with our businesses, and we rehired almost every employee and restarted that business. And over the last 10 years or so, it now operates in, I think, 27 or 28 different terminal locations now in 7 states, almost all of this organically. And, I don't know if I can publicly say the number. It's over $1 billion of revenue. And we started that business basically from zero, which is interesting. But what's very interesting to us there is that we bought that first site, even though we hadn't been directly in that industry before, at a discount to the liquidation value of the real estate. So we knew if we would have failed at any point in trying to run this business, that we had an out, and the out was to make money.
Yeah, it's like if you're lending to somebody, you have collateral, and the collateral is worth than whatever the amount you're lending is, or something like that, conceptually. Well, I mean, it seems like such a common sense way to invest. Yeah, actually, knowing that you have those real assets that you can hold on to.
We like it.
Yeah. Which, Bitcoin goes to zero, what do you own?
I'm curious how you. So I've been intrigued with Bitcoin for a long time and cryptocurrency, but how do you see it being a part of a wealth strategy for a family?
If I'm a betting man, I just think it's indicative of the fact there's so much liquidity out there right now, and it's really like the greater fool's theory. I just think that people are buying because they hope it goes up, and someone else buys it at a higher price. But I don't see there's any real utility. I don't know personally, do any of you guys use Bitcoin in your daily life besides for trading? Corey, what are your thoughts on Bitcoin?
Yeah, I mean, we view it as purely speculative, so it's not part of our investment strategy, because at the end of the day, you can't use it to pay for something. It doesn't really have an economical value to it. And yeah, if somebody's not going to buy it for a higher price for you, then you're kind of out of luck. It doesn't pay a dividend. So we're getting more and more clients who are interested in it, which doesn't surprise me. And especially as now there's ETFs where it's available. You can buy it in just regular brokerage houses. It's now going to be available in 401ks. More and more people are wanting to get into it, and it's making it more accessible, which has been making the price go up. But at a certain point, I mean, unless this does become a usable currency or a viable token, until then it's not something that we're utilizing.
Well, I'll say 2 things. First off, if our clients want to buy it, and I love my clients, you're probably getting near the top. And number 2, look, Beanie Babies went to zero or worthless now. Tulips are worthless now. So yeah, what's your hot take? Would you buy crypto right now? Do you like crypto?
I would be happy.
Go to zero.
I would be happy to sell them the chips in the compute space. Yeah.
There you go. Right. Hey, hope you're enjoying the most recent episode of the Payne Points of Wealth podcast. Everything you hear on this podcast, along with some due diligence of your own, can help you get ahead financially, literally at any stage of your journey. But if you want a more hands-on approach and you saved over $1 million for your retirement, Bob, Chris, Courtney, and I will run for you our total financial master plan, and we'll do that with no obligation or cost. It's a full holistic review. We literally look at everything. We'll go as far as building you your own personalized financial portal. We'll give you a bird's eye view of your entire financial life and hone in on every financial issue you need to address today, whether it's an income plan for retirement. How do you take Social Security? How do you draw from your portfolio, factor in inflation, and don't run out of money? We'll look at diversification. Markets have been wild over the course of the last couple of months. Has your portfolio been up and down? Or have you been sitting in cash, CDs, money market funds, paralysis by analysis? We'll put together a full investment game plan. We'll show you how to grow your wealth, but most importantly, protect it over the rest of your life. And we'll look at fees and taxes. Wall Street loves to sell you high cost, tax inefficient products, whether it's an annuity, mutual fund, insurance product, structured product. We'll do a deep dive of every investment you own. We'll show you how to reduce the cost and optimize your portfolio for taxes. It's not what you make, it's what you take. You'll get a full tax playbook, and we'll do this full review at no cost. We'll literally go through everything for you, do all the work up front. Simply go to www.paynecm.com/financial plan or click the link below to see if you qualify for a free financial review.
I started looking at Bitcoin around the same time I was looking at NVIDIA. I had it, from 2017, briefly, again, sold too early, but
yeah. We're just bitter is what the real story is here.
Right. No, but I'm, I try not to criticize everyone, but, I don't think you should have 80% of your net worth in a speculative asset like that.
Yeah, Chris says more like 75 personally.
75, okay.
That's it. Yeah.
There's a guy down in South Jersey somewhere, and he had made like millions on crypto, and somebody hacked his account.
Oh.
Lost it all. It was everything he had.
It's not good.
So, it's just it just goes to show you. It's not regulated. That's another problem. Anybody can get in there.
Yeah.
Yeah, I think it's more of a destructor of wealth than a creator.
I think that's right. Yeah. I'll tell you one of the most interesting things happening in cryptocurrency right now that is one of, I think, extraordinarily important for the United States, but a huge risk to our banking system is U.S. dollar stablecoins. So
yes.
With the most recent act, which is funnily named the Stable Act, the Genius Act.
The Genius
Act. And it's for stable coins, the Stable Genius.
Will be the most ironic act of all time, but yes.
Yeah. It'll cause, I think, a huge amount of U.S. dollars to pour into U.S. dollars from around the world, because you can imagine you're in Venezuela or Turkey or anywhere that has high inflation. Would you rather own, U.S. dollar coins or your local currency? The risk, though, is that, eventually if you're able to receive interest on those positions, and there's other ways you can get it, why would you open a bank account at all? A savings account.
Yeah.
And if you pull all the liquidity out of the banking system, what happens to the tier 1 capital ratios?
Yes.
And what happens to these banks' ability to make loans? So it's a potential risk for bank investors to think like.
I think it's a good point, but right now you're not allowed to earn interest on stablecoins, correct?
True.
Which also makes it another reason, why the hell would you own a stablecoin, right? If I'm not getting interest, I don't get points or anything else, all the other benefits you get through the proper banking system. I think it's kind of Circle is a great example of that. I guess that they keep all the interest for themselves right now, but I don't know. I just feel like unless that happens, is there really wide adoption going to happen with these stable coins?
I think there are ways that they can create incentives that is not interest, that sort of feels like interest.
Like a free baby beanie.
Yeah, I don't know.
Beanie baby. I can't say it right.
We'll see. We'll see what happens. There's some very smart, very wealthy people who are working on these issues. And I think one of the most beautiful things about capitalism is people end up finding a way. But it's the only reason why you can't pay interest right now is just lobbyists.
Ah, interesting.
Yeah,
right.
There's no other reason.
Well, because they're essentially backed by treasuries, right? Which are all paying 4% right now, and you're not.
So all the
getting
stablecoin companies are making the interest right now, and they want to give it to the people, and the
Do
government.
they,
Do they? Yeah.
They want,
It's a fair question.
Yeah.
But
one of the big questions right now, big debates on Wall Street is the Fed going to cut interest rates? And we still have we have another CPI report or inflation report that's going to come out. We have another labor market report that's going to come out, and we also have the PCE inflation report. What if Jerome Powell just wants to stick it to Trump? Do you think they'll cut rates? What's your hot take on this?
I think they're going to have to cut rates this year.
Okay, why?
I mean, just based off of where the report, and you can make an argument about whether or not the inflation numbers are an accurate representation. I mean, we see the affordability crisis in our country. We've seen where the price of eggs and housing and education have gone, and it doesn't appear to be moderating. But at least the government data says that that inflation is low. But I think, but there are other reasons the supply shocks are causing these things. So I do think they're going to cut rates. If they don't, there's this rumor that Trump is going to do the shadow Fed, which I think is a pretty interesting concept, which has never been done before.
Right.
Where he'll appoint or announce who will become Fed chair next, and that person will then communicate to the market exactly what their policy plan will be, which will completely hobble Powell.
Right. Well, I mean, you can argue he's already a lame duck, right? We know he's out in May anyway, and we know it's going to be whoever gets appointed that position.
You guys trade on futures, right?
Yeah.
It's more important.
Yeah.
Than the next year of the federal funds rate, what it's going to be years 2 through 5.
Right, exactly. Right. What are the anticipations? But I think my one question is, and you have a pretty good purview into the energy market, and I think this is what no one's talking about right now, is one of the reasons that inflation has stayed so tame is the fact that energy prices have been plummeting. And if you start looking out to the future, if you look at oil demand probably hasn't been as great as expected, but everyone's pumping more oil than ever, right? The U.S. is, Saudi Arabia. We know Russian oil is getting to the market. So what's your take on the oil markets? Do you think oil prices are going lower, or what do you see right now since you're in the energy business?
No, I think they'll be range bound sort of like where they are now, as long as there's no major change in Washington.
What if we get a resolution to the Ukrainian-Russian war? Would that actually bring prices down even lower?
I think that's right.
Yeah.
Okay. Which I think will be very good because as
that's disinflationary.
As you talked about on your show and you've talked about on the TV shows I've seen you on, it all flows from diesel costs.
Yeah, I just watch your dad and I take notes and then I steal his lines from my own media hits.
Good artists borrow, great artists steal.
Thank you. So arguably we know who the great artist is. No, but so I mean, I guess with your business, I mean, what are you seeing with oil markets right now? Like, what's going on the ground floor?
No, I mean, we definitely everything. It's strong, right? Demand has been good.
Yeah.
It's we haven't seen any visible shifts in demand, which is good.
And you think just because the world's well supplied that we're not going to see any spike in oil prices? If anything, maybe
geopolitical conflicts are always the wild card.
Right.
Yeah. We the way we position our businesses is that we are not directly tied to the price of oil. That's more for people who are if you're drilling, there's a set cost per barrel that you get it out of the ground. So whether it's $30 or $40 a barrel, if you go below that number, you start losing money. And so,
right.
But if you go from 60 to 100, that 40 all goes to the bottom line, and it's very profitable.
Your costs are fixed.
Correct.
Yeah.
We're involved in the midstream logistics and refining space, which more measures the difference between the price of gasoline, diesel, and finished products and crude oil. And that spread only really fluctuates with new refining capacity, it's very hard to build new refineries in America, at least.
Which is amazing you have a refinery in America because it's such a rare. Yeah.
It's been good. And and the other thing it fluctuates with is demand. So whether or not people are driving more.
And for you, I mean, because the end price fluctuates as well, right? So that's why it's always a spread between the two.
Right.
And that probably never, rarely goes negative, if ever, right?
Very rarely.
Yeah.
So it definitely does fluctuate, though. So it doesn't fluctuate necessarily with the price of oil, though.
Right, because it's more about supply and demand on the gasoline side.
Across all of if you look at all of our different businesses, we're really just tied to the general welfare of the U.S. consumer. Like, we just want America to grow faster and faster and faster, and that'll be good for our businesses. So
that's interesting.
Yeah. It's we do a lot of the basic necessities. We do energy for your car, energy for your home to heat it. We do housing. We build apartments. We're in the food business where we sell groceries to people and try to give them access to healthier foods. Media to help inform them. But we try to focus on the on the kind of core tenets.
With your companies that are more just kind of your old school companies, are you finding that AI is helping these?
Sure.
Is it, or is there a future that you think it will help them?
Amazing question. And there's like a ton of different threads to pull there.
That is an amazing question.
What I'll tell you is, as with most disruptionary events, I think it's maybe short-term overhyped, but long-term underhyped.
Completely agree with that. Yeah.
And you might have a little bit of a valley and a washout when the hundreds of billions of dollars of CapEx is not necessarily as productive as it's been for the last 3 years. But in general, I would say yes. I think what I'd say is, so I also started and own a technology company. And I'm a programmer by trade originally. And we would probably have 10 software engineers right now if it weren't for AI, and we have 4. And so this has happened.
Exactly.
Yeah, this has happened in really, like, the models who can really program have only been out for a year or two. This has happened in a year or two. And the thing that's concerning for me generally about the U.S. economy is when you look at past disruptions that, let's say, like when cars came through.
Yeah.
People were concerned, okay, the people who are driving the horse carriages are going to get disrupted. Well, they can drive the cars. The people who sweep the streets will get disrupted. Well, they can sort of do other things.
Yeah.
But first, it was the wealthiest people who had access to cars in the biggest city. Then it was the middle class. And then it was the suburbs. And then it kept going out into the rural areas. And I'm not sure the exact timeline, but this is not a 5-year event. This is a 10, 20, 30-year event where you have the car parkerization of the United States. We have gone from 10 programmers to 4 programmers in like a year and a half. And there's a huge swath of the population that are not just software engineers, but are lawyers, accountants, other fields that in 5 years or so, 10, 20% are going to just be dislocated. And that has never, it's unprecedented. And that has never happened in our country. And so one of the things that I have Red Apple focused on, and also my policy on the political side, is how do we support those people who will be dislocated? And because I don't think it's just going to be the engineers, because when the Optimus robots come, when the Figure AI robots come, we're going to see huge swaths of the population be dislocated in the next 5 to 10 years, and nobody's talking about what to do for those people.
Well, first off, we don't need more lawyers. So that's probably a good thing.
Yeah, definitely.
No, but I think my only counter to this is, I think, and no one talks about this enough, is we have a population problem here in the U.S. I mean, if you look at the amount of baby boomers retiring, and now that the Trump administration has successfully cut off the border and we don't have a real formalized immigration policy to bring more people in, I actually think we need AI desperately just to help the workers that we have, because we don't have enough workers. And I think this is what all the economists keep getting wrong. They keep like betting on the labor force, the unemployment rate to like spike. And I just don't think it's going to happen. I think our bigger problem is we don't have enough labor to service all the business. And now you have President Trump. Like, I don't think we're going to get all these billions of dollars in from all these other countries, but we'll probably get a portion of it, right, for whatever it's manufacturing or whatever, like national security, industries that we want to have here in the U.S. But I do think the bigger problem is labor shortage. Like, I think that's
it's
where
a huge problem.
It's So I don't know if we're going to have this big displacement. But you're right. The adoption rate is higher.
I hope that
than we've ever seen.
I hope that you're right, because it's going to come all at once. Well, I'll tell you, as far as applicability to the folks who listen to this who invest, there's a huge wave of people who are increasing their profitability estimates of the S&P 500 and stocks based off of AI productivity. And what I'd say is the best companies will get better, and most medium companies will not. Because if you think about what happens in a range from a company that is highly commoditized to a company that has actual pricing power, if you're in a commoditized industry and you introduce AI to lower your cost of operating, then you will be able to take share much faster than your competitors, and then your competitors will be forced to take on AI. And so the value of the AI productivity that it creates will go to the consumer.
Great point.
Yeah. Versus Google, who doesn't need to lower its ad pricing based off of AI, can just capture all of the productivity gains.
Right. That's why they're laying off right now.
Right. So you have to be careful about which angle. Like Coca-Cola, for example, is not going to have to cut prices to compete with Pepsi because of AI productivity. All of it will accrete to the Coca-Cola shareholders.
Which is a great point, because this is where the tariff argument becomes like null and void, because like, okay, maybe incrementally your costs go up because of tariffs, but if you're reducing costs over here because of AI, and also I'd argue because oil prices are down significantly this year, this is why you're seeing profit margins in the S&P 500 at like record highs right now.
Yeah, very good point.
Yeah.
But time will tell, because you get productivity gains, and then the amazing thing that your point earlier about America is you get competition for those profit margins. So
which is disinflationary though. It's not the major inflation way that our economists were like predicting for the summer.
Very good point.
So I think my other big question is, because you're in the real estate industry, I know you have some real estate in Brooklyn, you have some real estate down in Tampa, which is one of the hottest cities in America. If the Fed is to cut, what kind of impact does that have on the real estate market?
It's great for the real estate market.
Yeah.
I think unfortunately one of the biggest fallouts from the slowness to cut rates has been building new buildings, and like that plus regulation. So like you look at New York, for example.
Yeah.
Without going into too much detail, there's all these policies that are in place to help create more affordable housing. But unfortunately, it's a fundamental misunderstanding of supply and demand, because the very policies that they put in place to try to decrease the cost of housing actually increase the cost of housing. There's a state program, for example, that says, okay, if you build a building that's over a certain number of units, then you have to change like these wage structures, and you need to have this percentage affordable and all that. And that cap is about 100 units, so 100 apartments.
Okay.
So if you look at all of the 100% of the applications under the new program to build these buildings in New York, 100% of them are 99 units or below. And so the real question is, how many apartments could you have built and increase the supply of if you didn't have these? So like looking at our friend Javier Milei, the president of Argentina,
yes,
he has removed all rent regulation from Argentina and Buenos Aires. In a year and a half, supply has increased and rents are down 30%.
That's incredible.
In a year and a half, 2 years. There is 40 to 50,000 by our estimates vacant apartments in Manhattan that because of rent regulation are not being put onto the market.
That's insane.
So you could have, by just changing policy, you could increase a huge number of units, and you could also bring all these units back online, and you could cut the price of housing in New York.
And we don't have to resort to socialism.
You know, Ryan, I know it's a half joke, but the saddest part about that is that when they freeze rent regulation, they freeze rents in New York. They're only able to freeze rents on the regulated units, which means the free market rents can float. And also, if you make it impossible under that regime to build more apartments, guess what happens to the price of free market rents?
They keep going up.
They're going to skyrocket.
Yes.
And so the very policies that these socialists are saying are going to lower rents are going to explode them.
It's so ironic, and it's
sad.
If the Fed cuts rates, it's going to make it more affordable to be building these houses, which inevitably is going to make rents more affordable for people.
Yep.
We were talking earlier about kind of the American dream, and part of that is buying a home.
Absolutely.
But if the Fed cuts interest rates, that doesn't affect longer term rates, which means mortgage rates are not coming down, and that doesn't help the affordability crisis that we're seeing. So even if rents come down, how do we see that people can actually buy more houses? Does that fix that problem or not?
Another fantastic question. You know, I think the short-term rates do have to be integrated into the construction loans. So hopefully the construction loans become more affordable for new builds, and that'll increase supply. And although mortgage rates aren't that much lower, you should have more supply, is my hope.
Yeah.
Right. Because most development is done on shorter term rates, basically. Yeah.
Exactly. I'm very involved in various elections around the country. I built a company to do that separate from Red Apple. And I talked to a lot of the folks who are in charge, who are the baby boomers. And, you know, my parents are baby boomers. I love them very much.
Yep.
But a lot of folks, I'm not saying my parents, are out of touch. They're sitting there and saying, why don't these kids understand basic economics? Don't they understand socialism has never worked in any place that has ever existed? We need to keep things the way that they are. But the problem is the kids.
Affordability.
Yeah, the kids are not all right.
Yeah.
What has gotten cheaper?
100%.
Phones have gotten cheaper. TVs have gotten cheaper. Education has doubled and tripled. Housing has doubled and tripled. Food has doubled and tripled.
Yes.
Unless you owned a home or owned apartment or land or assets before 2020, before the big inflation boom, you are sitting at a huge disadvantage where you're spending 70, 80% of your income on things that will just barely sustain yourself. And so with the boomers are saying, oh, you know, you kids, what are you doing? We need to keep things the same. They look at them and say, what are you talking about?
Yes. Yeah. For the baby boomers to buy a home, the affordability compared to today, it's like night and day.
Yeah. You used to, and not everyone even went to Yale in the 70s, but I believe the math is in the 70s, you could work a few hours a day of minimum wage and afford a Yale tuition.
That's crazy. Yeah.
Try doing that now.
Yeah. Forget about it.
Yeah.
Well, you and I were talking about this too. I think another part that does play into this, though, is I think with social media, people's aspirations have gone way higher too, though. I think what people want in life, like, I think is a little less modest, in all fairness. I think another part of it with Gen Z is like they see people doing all these like glamorous, like
Keeping up with the Joneses.
keeps up with Joneses. So I think there's also like your idea what the standard should be has probably gone too high as well on top of it.
I think it's good to be able to strive to create a better life than
Yes.
your parents and your family. I agree with you. The copycatting behavior from social media, especially in the wrong. We all know plenty of people who live their life for Instagram. They live their life. It decides what they eat, what restaurants they go to. It decides where do they go to college, where they go on vacation, what kind of partner they have. These are not good situations to be in, and I think it's creating there's a great book called The Anxious Generation. It creates this unbelievable amount of anxiety in the pits of their stomachs that they try to fill with consumerism, where they really should be filling it with more productive and more faith-driven things.
Yeah.
You look at pre-social media, the media was controlled by the Fox Newses, the CNNs, the MSNBCs. It was all top down by some wealthy handful of people in an ivory tower deciding what the population gets to see, do, and think. And that behavior really started with Gutenberg and the printing press, whereas before that, it was all the oral tradition. You would go to the smartest person in your village and ask them, okay, what do you think about this thing? And that's how you figured out what happened. And then boom, social media happens, and suddenly you can find the smartest person in every village on any topic. Now there's a lot of disinformation that has happened from that we need to sort through. But unfortunately, and fortunately, what this means is if you have some very interesting, thing you're really obsessed with, you can go find a community of 30 people in the country or in the world who also are obsessed with that thing. Unfortunately, I think this leads to tremendous tribalization where especially baby boomers long for the days of Walter Cronkite, where there was 3 news channels that you had to appeal to the entire population with. Now you can have 1 million news channels all through streaming that you need to only talk about to your specific group of people.
Yeah, and then you add to that also like the algorithms also give you more of what you're listening to. Yeah. So it's kind of like just by unconsciously you're hearing more and you're living in that echo chamber.
Well said.
Less counter view. Yeah.
I mean, so how do we counter that? I mean, I think it's a big question.
I think shared values and shared principles. And I'm not advocating for any, faith in general, but having some sort of shared set of principles with our country and our communities, I think is a very good thing.
Well, I think it's where family is a big deal. And I know you and I have talked about this like briefly, and we spent a lot of time growing up with our cousins, spending time with our cousins. And I know your wife comes from a big family. It was an Irish name. So I know how it goes. But I think I find that's like a big part of like for us specifically is just because there is that shared bond. We all grew up together. We all have a lot of the same, like even like everyone could be on different political spectrums and stuff, but there's that shared value system that's stronger. And I think that's a really good point. I think you got to find that somewhere for sure.
Yeah. And for some people it's religion, others it's patriotism. Unfortunately, I think politics have replaced religion for many people in our country, which is
so sad.
Which is a disaster.
So sad. It really has. Yeah. That I think is one of the bigger problems right now.
Yeah. But if you look at recruitment numbers, they're up. So
recruitment numbers for
major religions.
Really?
Of all types. Yeah.
That's interesting.
They're spiking.
That's great. Is that like all religions across the board? Because I know there's all these like newer types of churches as opposed to your more like traditional religions. I'm just curious if there's like a disparity between
so
the two.
I've seen numbers. I'm Greek Orthodox, and Orthodox numbers are up. I've seen Catholic numbers are up. I think certain segments of Judaism are up.
Interesting.
So demographically, there's this saying that the world belongs to those who show up, and if you look at reproductive rates between conservative, not conservative politically, but conservative religious groups of all religions versus atheist or secular, there's a huge difference. So like very religious people are having many kids, and less religious people are having less kids. And so if you think 2 generations in the future, 3 generations in the future, where a lot of people have, doomerism about how, God is dead and religion is going to be gone, actually within, I think, 2 or 3 generations, it's going to be even stronger than it ever was.
That's a scary.
Yeah. And And also, it's for most religions, and not everyone gets along on the very conservative sides of each of their religions, and so that will lead to even more divisiveness, which is potentially a concern. But in general, I'm pretty pro religion of any kind.
So it's having a faith and having some sort of foundation outside of like being political or something that's like
I'm not saying we need to stop religious recruitment. I think we should actually increase it, but not for this podcast.
Are you recruiting for your cult, John?
Yeah, no, exactly. Yeah.
I actually once went to a Greek Catholic wedding, and we had both ceremonies. The Catholic ceremony was an hour, and then the Greek Orthodox was 2 hours.
Yeah, there you go.
The Greeks and the Catholics should get married. I'm just kidding. But one of the things that I've heard, just from the way you've been talking, like about how like you invest, about the way you run your business. It sounds like you look at it from a perspective of values. Like you take your own personal values and put it to the business. Like you made the point about how private equity kind of just like strips the guts out of these businesses, where you guys look for the undervalued asset and you look to invest in it, you look to improve it. Like you talked about bringing in, some of the ex-employees to bring them back. Like, I mean, that's the impression I get. Is that true?
Yeah, no, it is. And I appreciate you saying that. I'll tell you, stepping back, both of my parents come from very humble beginnings. My mother is, her family are Russian immigrants, but she was born in America, grew up very poor. Her father was a coal miner in Hazard, Kentucky, and they've been there for a long time. Wow. We've seen the hollowing out of the middle class. My father is an immigrant from Greece, again, came from very humble beginnings, and was able to live the American dream. And at any point in their life, their why for why they were working was to put food on the table. They didn't have the luxury of saying, what is my purpose? And I view my seat as there is all of this tremendous sacrifice from my relatives, my ancestors, that have put in the time and effort so that I can sit in this very seat. And if I were not to use my platform to make my community and our country better, then I will have done a disservice and disrespected their sacrifice. And so I try to embed that in everything I do politically and in business. And it's very easy to lose meaning, just trying to goose the biggest return possible. And even look at real estate. A lot of the time, people are churning out apartments, but they don't think about, the apartment that you're building, that is somebody's home, where they form their memories, where they meet their grandkids for the first time, where their kids get to play and where they get to grow up.
Yes.
And so as you're building these things, you have to keep that in mind and build them as if, you put yourself in their shoes. Like, how do I make this somebody's American dream? And so we try to embed that. And I'll tell you another from a business and a disruption perspective.
Yeah.
With multifamily apartment rentals, one of the many reasons I like it is in 20 years, I don't know if I'm going to be getting paid in dollars, Bitcoin, barley, or bullets, but people are going to be renting apartments. And so it's
simple, but such a great point.
Yeah. So
the
exchange rate may change.
Yes. Yeah.
But it's important.
Intrinsic value. Yeah.
Yeah. I think it's one of my core philosophies is, with my spouse, who I got married recently and had a child, and it's been one of the greatest experiences of my life. And I always use the bus test, where if I were to get hit by a bus and had 2 seconds left of consciousness, like would I be happy with the principles and everything that I've left behind in my family life? And the answer is like overwhelmingly yes. My wife is incredible. She's going to raise our kids even better than I would be able to raise our kids. And it's the same thing goes for my business, where there's this trend of effective altruism, which is, you can do anything you want business-wise. As long as you donate to charity, it's going to end up okay. I don't want to sell crack and then donate it to homeless shelters.
Yes.
So I want whatever I'm doing at any given moment to be aligned with the long-term plan I have for our country and how I want to contribute, so that if I were to get hit by a bus, not only am I happy in my family life, but I'm happy with the legacy that I've left behind.
And to follow up on that a little bit, I don't think we were talking earlier before we hit the record button today. One of the things that you said is that the American dream is still very much alive, and I think we all believe that. But you said it's harder now to achieve the American dream. What do you mean by that?
The affordability crisis. Like I said, the kids are not all right. You can't. If you look at the average age of, not to pick on McDonald's in particular, but entry-level jobs, if you look at the average age of the people holding those jobs over the last 20, 30 years, it skyrocketed. And those were never meant to be careers. They were meant to be launching pads.
Yes.
You know, if the last 20 years, there's been essentially no real wage growth until the last few years. And that is from a number of reasons. Technology, which I'm a technology accelerationist, I'm pro, but automation drives that. Globalization, moving jobs overseas, that drives that. Illegal immigration, that's driven that. And at the same time, the cost of education has doubled or tripled. And plus, the student debt has gone out of control. And so we go to these students and we promise them, okay, once you go get your degree in whatever this humanities is, you'll be able to go get this amazing job. And then, by the way, that job doesn't exist or it's getting automated by AI. So
that's been the biggest scam, right? Is this promise that we've given this. And then the reason why Gen Z right now is so, I guess, disenfranchised because of that reason. Yeah.
And then they try to fall back on the entry-level jobs, and guess what?
Yeah, there are none. They can't get them.
And then 5 years from now, there's going to be,
I
don't want to say zero, but from the Optimus robots, which, by the way, if Elon's listening to this, I'm very pro technology, I'm very pro Optimus. But we're going to have to build whether you call it a safety net or retraining infrastructure, some way to lower the friction of labor change. When President Obama killed the coal industry and you went to 55-year-old coal miners in West Virginia and said you should learn to program,
right, it doesn't make sense.
It doesn't work.
For the people that are going to get in transition where there isn't really an opportunity, that's what you have to think about.
Exactly
That's
right.
a fair point, right? Because not everybody's going to be able to easily or agilely go into another profession all of a sudden. That's a good point.
If we don't work to fix it now, socialism is inevitable. It's going to happen if we don't fix it now.
So you said you just recently had a kid, right?
Yes.
Congratulations.
Thank you.
First of all, how old?
He's 5 months yesterday.
Oh, congratulations.
Thank you.
So I'm curious, we talk a lot about like the next generation and like what jobs are they going to have, what is AI going to look like? Now that you have a kid, like how do you think about this? And like, how do you think about teaching them the values of money that you grew up with, or what kind of careers to look at? And how much of this that's going on with the world changes that?
First, thank you. Yeah, I love my son. It is almost, when I close my eyes at night, I see his face. He's just incredible. The world is changing as far as, one of my friends has a really good point that, the death of experts. Unless you have a perfect understanding of every single, thing that's happening within your field of biology, if you're slightly worse than that, the LLM beats you. Mm-hmm. And so the actual knowledge of those things gets muddled as far as its value, but the ability to connect principles across disciplines and connect principles even intradisciplinary it becomes even more important. And so being able to use tools like AI to do that. So what I would say is most of my focus, or our focus with our son, is probably going to be on problem solving across various domains, rather than encouraging them to do rote memorization or expertise.
Free thinking. That's what it is.
Free thinking.
Free thinking.
Yeah.
So the one question we ask every guest, it's a little bit out of like left field, but in your youth, what song or album, when you heard it for the first time, had a profound impact on the rest of your life?
Appetite for Destruction.
Really?
Yeah.
I'm not expecting you to be a Guns N' Roses
Huge
man.
Guns N' Roses fan.
Why? It's a great album. I love it.
It's an awesome album. Well, I was always a very creative kid, and I really got into instruments and playing music after I heard that album, specifically "Sweet Child of Mine."
That intro is one of the best of all time.
Yeah, when I heard that, I just like stared at my hands. I was like, how could a human produce that sound? And so I figured it out shortly after that.
Nice. I'm a guitarist as well.
Okay, we should jam sometime.
Yeah.
Do you play
Bass, actually.
Yeah.
drums?
Oh, I wish. I'm not musically inclined. No, I'll be there cheering you guys on. And I'll
Okay, perfect. We've almost got a band here. This is good. I like it.
Courtney will learn to beatbox by the next time.
Do you guys jam?
Sometimes.
Yeah. We haven't done it in a long time, but yeah.
Neither of us sing, thank God.
Okay, that's good. Do you have a go-to Red Hot Chili Peppers? Like, what do you guys?
I mean, I love all that stuff. I used to play in a lot of bands around New York, believe it or not, back in the day. They were all very B level.
Wow, that's really exciting though.
Yeah.
That's why you're so good in front of a camera.
Yeah, I mean, anything. Yeah, I never not wanted to be in front of like the stage or anything. I was like just good enough to get on stage, never good enough to be like a professional.
Yeah, I'm sure you were great.
But that was a great choice.
Well, what about you? What is your favorite
go-to? My respectful level for you just went up like this.
Oh, good. Yeah.
I mean, the nice thing about us, I don't know if your dad was the same way, but our dad was a huge classic rock fan.
Yeah.
So when we grew up, we listened to he was playing Bowie, Zeppelin,
nice,
Stones. Yeah, but I actually think the album David Bowie, Ziggy Stardust, and the Spiders from Mars was like we played that album like
all the time,
Yeah. I thought it was just so cool, and it's just like Bowie was so outlandish, So I think that would be the one I would pick.
That's awesome. I love it. You have a similar one?
No, actually, mine was Smashing Pumpkins, Siamese Dreams.
Oh, okay. What about you?
I am not the music buff here at all. No, I am.
You have one, though. You have to have one.
I don't know. I think the only thing come to mind is I actually worked at a music label for a while back in
college.
college.
Wow, that's super cool.
Yeah, which was like a fun time in my life. And that's when Kanye had come out with a big album back then. It was I think it was Dark Twisted Fantasy. And
good album.
I worked on his stuff and Justin Bieber's, Mariah Carey's. So all of those albums I think were very formative just because I was in the room trying to decide. I mean, I was an intern, so I wasn't really deciding. But which ones were going to come out as the single and which ones, were going to, be the big, the bigger hit. So that was like a very, very cool time in my life. Yeah.
Music's really interesting. I got really into studying music rights and investing in music rights a few years ago.
I mean, some of that stuff is like when Dylan sold us Kyle for like $500 million or something like that.
So you used to be able to buy these at between 10 and 12 caps on stabilized. So like 10% yields,
what did you
12%
buy,
yields.
Out of curiosity?
We didn't end up buying anything specific.
Yeah.
But then private equity got into the mix and bid it up to 5 caps. Jesus. And so it's not really that interesting anymore. It's like, if you've ever seen that Scooby-Doo meme where they pull we're going to reveal who the monster is and you pull the hood off and it's like, who has ruined my favorite childhood brands? And it's like, private equity.
And your grandfather worked on the lighthouse. I tried to ask your dad about this. He was remote for like 7 years. Yeah. He didn't see another person. His dad worked the lighthouse and literally was by himself for
on a rock in the middle of the ocean.
Yeah.
And then he came to America in search of a better life with my 6-month-old dad. And he worked as Longchamps. Worked 3 jobs as a busboy, was never promoted to waiter because he didn't speak enough English. And he put everything he had in life into his children.
Yeah. It's incredible.
It's my dad has this line, which is, my parents came, his grandparents first came here and then died of the Spanish flu. But he says, my grandparents came to America in search for the streets paved with gold, and it took 2 generations for us to find it.
Thanks for listening to the Payne Points of Wealth. Hopefully you found the ideas discussed in this episode valuable and useful for your own financial journey. You can find out more about Bob, Ryan, and Chris's firm, Payne Capital Management, at bebullish.com or through the contact information found in the description of this episode in your podcast player or app. Join us next week for another episode of The Payne Points of Wealth, brought to you by Payne Capital Management. Information provided on today's show is provided for informational purposes only and does not constitute investment, tax, or legal advice. Investment is obtained from sources that are deemed to be reliable, but their accuracy and completeness cannot be guaranteed.